Hello, I am Dewan, and welcome back to Velocity Banking Together. Today, we're going to talk about a very important topic: how to choose the right line of credit for you and your situation. We're going to give you real life examples from our journey, and we're going to give you tips to start with the Velocity Banking strategy. So, why the debt tool matters? Your line of credit is your main weapon in the Velocity Banking space. We also call it debt tool, the main debt tool. The right tool helps you chunk safely and flexibility. Remember, with velocity banking, we're care about flexibility and liquidity. The wrong tool can slow you down or even add risk, and we don't want that. We don't want risk for you when you're doing this strategy. We want to keep your risk low, and we want to make sure you're making progress towards your strategy. Options for your line of credit. So there's lots of options out there. We started with the credit card. We did in particular a smart rate credit card, not cashback or points or anything like that. You want to start with the smart rate credit card. Next is the personal line of credit, also known as PLOC. Then you have your home equity line of credit, also known as the HELOC. Then you have a business line of credit that you could use. And then last but not least is the all-in-one loan, but I do consider that as an advanced strategy. So how we started, we began with a 20,000 credit union credit card at 10.9%. We went to our local credit union. We checked with them and did the paperwork to get approved for $20,000. We used that $20,000 and we paid off our debt faster. Important, our credit card allowed us to transfer money from our line of credit to our checking account with no cash advance fees. Let me repeat that. There's no cash advance fees on that credit card. That is very important part of the credit card strategy. Many credit unions offer this. We had one long time ago and did not realize that was a really good benefit that we had. So they've been offering this for a long time, but you always want to check with your local credit union to see if you can get approved for this credit card to get started. And so what did we do with our credit card? We started in January of 2025. Now we're in July of 2025. And so what have we been doing with that smart rate credit card? What we did was we took 11 chunks total. The amount that we borrowed was $50,900. We borrowed $50,900 of the bank's money, other people's money. And how much interest did they charge us for us to be able to do that? We paid $596.84 of interest. That is an effective rate of 1.2%. Now, picture you going to the bank and asking for a loan of $50,900. You are going to pay way more than that in interest. And so that is very impressive that we've been able to pay 1.2% with borrowing $50,900. But like I said, we were doing the velocity banking strategy, putting our income back on that line, cutting that interest down, and getting that done over 6 months. And so pros and cons of each tool. Credit cards. They're easy to get. They're flexible. Like I said, you can just go to your local credit union and just make sure there's no fees to get started with that credit card. The cons is there could be higher rates if you're not careful. And you must avoid the cash advance fees. That is very important when you're doing velocity banking. Next is the PLOC. It has lower rates. There's usually like an intro rate with it, but it is unsecured. So they're probably not going to give you a large line of credit, and it's going to be harder to qualify for with your bank. You might have to have a 700 plus credit score. Next is the HELOC. The HELOC, you can get lower rates. You can do a second lien HELOC, for example. You might get an intro rate for the first couple of years. The benefit of having the HELOC is you can do larger chunks. You might be able to do 10, 20, 30, $40,000 chunks when you're dealing with your home equity. But the con is you got to have home equity. You cannot do the HELOC unless you have, 90, 80% equity into your home or more. Next is the business line of credit. You can get larger limits for your business. If you can prove that your business is making substantial money, it also gives you flexibility when you're dealing with a business line of credit. But the con is you got to have a business. You got to have a business to get a business line of credit. And your business credit, they might be looking at that relationship that you got with the bank first before they give you that line of credit. Last is the all-in-one loan. That is the strategy that we're currently using. We went through North Point Bank, loved the process. It is the ultimate combo tool of being able to get all your money into a line of credit and making those principal payments and cutting that interest down. For example, to give you some real life numbers, we had a traditional 30-year mortgage. Switching over to the all-in-one loan, we were going to save $200,000 in interest and pay off our home in 6.5 years. And so the math is crazy, but you have to make sure the con is it's complex and it's not necessarily starter friendly. I would not maybe start with an all-in-one loan right off the bat unless you know what you're doing with the velocity banking strategy. And so our personal recommendations, what do we recommend? We recommend to start simple, start with a credit card, do the no cash advance fees, or get a personal line of credit, a PLOC with a good rate. They might be running a special rate at your local credit union. Start there. Use the smart chunking rules to stay safe. Move to a HELOC or an all-in-one loan once you got the velocity banking strategy down. Maybe you got your debts down and you're getting used to the strategy. And as your cash flow grows, that might be a natural progression to move into something like a second lien HELOC or an all-in-one loan. Important rules to remember. You must be cash flow positive. You don't want to be doing this if you're not cash flow positive. There is another strategy. We might have later videos to talk about if you're not cash flow positive. But if you are, you can do these things. You don't want to chunk more than 12 times your cash flow. If your cash flow is $1,000 a month, you don't want to be chunking, 12,000 plus dollars a year on your line of credit because it's going to take you a long time to pay that back. We don't want you taking too long. Don't use more than 66% of your line of credit. If your line of credit is $10,000 for round numbers, you don't want to be chunking over $6,600 out of that line of credit at a time. Just chunk that much. You don't want to be over leveraging yourself. And so call to action. Please leave us a comment below. We would love to hear what type of debt tools you have. How are you implementing the velocity banking strategy currently? Or what is your plans to start the velocity banking strategy? We would love for you to subscribe and follow our real life journey. We're going to give you real life examples like I did in this video. And we're going to teach you every step of velocity banking strategy. So please subscribe, and we really appreciate your time. Thank you.